Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Michael Kelly, global head of multi-asset at PineBridge Investments, to discuss which emerging markets have a more favorable outlook. Michael, it's great to see you. Welcome back to Trade Talks.
Thank you. Thank you.
Tell us about your Go East thesis.
Well, our Go East thesis is really when we look at Western markets, U.S., Europe in particular, we think that they're actually quite advanced in their business cycle, almost in an overheating situation. And it's very, very hard to make money when you get into that stance. When policy is restraining things, there's not a lot of growth to be had. Where, you know, if you look east, it's almost the exact opposite. You know, China put itself in a recession 2020 and 22. They're trying to get out of it. Many of the other economies, Japan, Korea, Taiwan, you know, they manufacture and sell goods to the United States. The United States, despite being, you know, sort of extended, is also in a rolling recession where the goods side is producing underneath retail takeaway. So the Asian manufacturers are exporting into the portion of the economy in the West that's in recession. So we do think that they have nurturing policy. It's just a much lower base to grow off of, and we think that that's where you want to be for now.
So do you think that we will get a full-blown recession? Will it ever materialize in the U.S.? And if so, how deep?
Yeah. Well, the answer is yes. And how deep? Well, the deep recessions are balance sheet recessions. We think we're going to get an average income statement recession. We just had a balance sheet recession in 2008. Balance sheets are very fortified, consumer, corporate. You know, the government balance sheet's getting a little stretched. That's the news of the day. Yeah, we still think we're going to have one. And it'll be your average 2000 to 2002 or something other than the 2008, 2009 parallel.
The fiscal impulse is a counterbalance to tighter monetary policy. How is that impacting rates and inflation?
Well, I'm glad you brought it up because, you know, it was sort of an unspoken about topic until just the last 3-4 weeks. But the reality is coming into this year, whether you're the CBO, you're every big brokerage or asset management firm, most of us thought there would be a little bit of a fiscal drag this year. There's actually been a 4% fiscal thrust. 4% fiscal thrust is a big fiscal thrust. They only happen when you're in a recession to get out of a recession. There hasn't been a top of the cycle fiscal thrust in 50 years. So it is complicating the job of being Chair Powell because it's undoing a lot of what he's trying to do. It's making inflation, it's the proverbial 1 foot on the gas pedal, fiscal, 1 foot on the brake, monetary. And, you know, these are two very powerful forces. And, you know, which one's a little bit ahead of each other? Looked like the monetary was a little bit, but now we're reaccelerating because the fiscal thrust is actually accelerating as we speak.
Well, Fitch recently downgraded U.S. debt from AAA to AA+, citing fiscal challenges and deteriorating governance. Do you think that downgrade is going to impact fiscal policy in the U.S.? I mean, it's on the global stage right now that it's just not being managed.
Well,
properly,
if you were the president and you had $1 trillion authorized in an infrastructure program in 2021 to be spent any time over the next 10 years, they're actually ramping that spending up right now. If you were the president and you had a CHIP Act that authorized $300 billion to be spent any time in the next 10 years, that's really ramping up right now. If you're the president and you had an IRA, you know, $400 billion to be spent any time in the next 10 years, you may be tempted to be ramping that up right now. So do I think that these jitters in the markets are going to impact, you know, that? No, I don't. I think that's a foot to the gas pedal as hard as they can do that, you know, really through the end of 2024.
All right, Michael, appreciate the insight as always. Thanks for joining us on Trade Talks.
Yeah.
And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.